You know, every once in a while, a company comes along that doesn't just join a market, it completely tames it. And that's exactly the story of Urban Company. It's about how three founders looked at one of the most chaotic, disorganized industries in the world and saw a massive, multi-billion-dollar opportunity. They set out to solve a problem that pretty much everyone knew about, but no one had really dared to fix.
I mean, we've all been there, right? The air conditioner gives out on the absolute hottest day of the summer. You finally get a technician on the phone, and you hear that classic line, "I'll come tomorrow." A promise that, let's be honest, often turns into days of waiting and frustration. That simple phrase isn't just an annoyance, it points to a huge breakdown of trust and reliability. And that breakdown is exactly what Urban Company was built to fix.
So to really get why Urban Company became such a huge success, you have to picture what they were up against. The home services market in India was, well, a total mess. It was this giant, sprawling, completely unregulated world of individual plumbers, electricians, and beauticians. It was basically organized chaos, with no single place to find help, no guarantee of quality, and no reliable way to connect people who needed a service with the professionals who could provide it.
And this lack of organization created problems for absolutely everyone. For you, the customer, finding someone reliable was a total gamble. It was all just based on asking a neighbor or a friend. And for the millions of skilled professionals out there, finding steady work was a constant struggle. There were no set prices, zero quality control. The whole system was just fundamentally broken on both sides. But here's the crazy part. Buried inside all of that chaos was a staggering opportunity. This broken, inefficient market was worth over $100 billion. It was this massive prize just sitting there, hiding in plain sight, waiting for someone with the vision to not just play in the market, but to completely rewrite the rules. And this is where the whole story pivots. Three young entrepreneurs looked at this billion-dollar problem, and they didn't see a dead end. They saw a launch pad. They believed they could be the ones to finally bring some order to the chaos. Their solution? A brand new startup called UrbanClap.
So UrbanClap launched back in 2014, and the idea behind it was just brilliantly simple. They wanted to create the Uber for home services. The founders, Abhiraj, Varun, and Raghav, imagined a single, easy-to-use app where booking a plumber or a salon appointment would be just as simple as calling a cab. But they were smart. They knew that a fancy app alone wasn't going to solve the problem. The real issue here wasn't technology, it was the complete lack of trust. So their big, game-changing idea was to build a platform that didn't just connect people, it actually created trust from scratch. How? By standardizing the entire experience. We're talking background checks, professional training, upfront fixed pricing, and service guarantees. That was the real innovation. Okay, but building a system of trust across an entire country requires two key things: a ton of money and a really solid business model. UrbanClap needed to build an engine that was powerful enough to actually make their huge vision a reality. And boy, did they move fast. In just 1 year, 2015, they pulled off an incredible funding blitz. They closed a seed round, a Series A, and a Series B. They brought in millions from huge investors like Excel and Bessemer Venture Partners, giving them this massive war chest they needed to scale up like crazy and grab the market lead early on.
So how were they planning to make money? Well, the main engine was a simple commission. They'd take a cut, around 20 to 30%, from every single booking. When you're doing over 2 million orders a month, that adds up really fast. But they didn't just stop there. They built other revenue streams too, like selling products to their professionals and charging fees for their training programs.
And all of this, the cash, the business model, it all came together to ignite what's called a platform flywheel. It's a really powerful self-reinforcing cycle. Check it out. The more customers you have, the more professionals want to join your platform. The more professionals you have, the better your service and availability becomes. And better service builds more trust, which, you guessed it, brings in even more customers. It creates this powerful momentum that becomes really, really hard for competitors to beat.
But there's a catch. This kind of super fast, venture capital-fueled growth came at a pretty staggering price. The company was staring down that classic startup problem. Do you chase growth or do you chase profit? In their race to dominate the market, they were burning through cash at an absolutely terrifying rate, which led to a period of huge financial losses.
If you look at the numbers for fiscal year 2021, the picture was pretty stark. Even though they were making a lot of money in revenue, their losses were more than half that amount. Let me put it this way. For every 2 rupees the company was bringing in, it was losing more than 1. That kind of model just wasn't sustainable.
The real problem was something called unit economics. Basically, the cost to get a single new customer through ads, discounts, all of that was way higher than the money that customer was bringing in. They were literally spending more to get a customer than that customer was worth in the short term. They were buying growth with cash they just couldn't afford to keep losing.
So, staring right over the edge of a financial cliff, the leadership team made a really tough but critical decision to pivot. They rolled out 3 major strategic changes that were designed not just to keep the lights on, but to completely reshape the business and finally point it in the direction of profit.
First up, they specialized. They got rid of a lot of their less profitable services and went all in on the ones that made them the most money, and that people use most often. Think beauty services and appliance repair. Right away, this made every single transaction they processed healthier for the bottom line.
Second, they took way more control over their professionals. So instead of just being a platform that connected people, they got deeply involved. They started actively training their pros, selling them standardized equipment, and even controlling the prices. This didn't just improve quality and consistency, it also opened up brand new ways to make money.
And their third big move was introducing a subscription model called UC+. This was huge because it created a steady, predictable stream of revenue. They charged an annual fee for extra benefits, which had the brilliant effect of locking in their most loyal and valuable customers.
And guess what? It worked. These pivots didn't just save the company, they made it thrive. This led to a huge milestone in the startup world and set them up perfectly for their next chapter.
The proof that their new strategy was working was undeniable. In 2021, a massive new investment round pushed the company's valuation past that magical $1 billion mark, officially making it a unicorn. The investment community was basically screaming its approval. The pivot had been the right call.
This whole journey took nearly a decade. Think about it. From their launch in 2014 to hitting that unicorn status in 2021, the company finally reached the most important milestone of all: profitability. By fiscal year 2025, after all those years of burning cash to grow, the engine was finally running on its own.
But for Urban Company, being profitable isn't the finish line, not even close. Their vision is way, way bigger. They want to be the one, undisputed go-to platform for any service you could ever need in your home. They want to be the Amazon of home services.
The story of Urban Company is really a masterclass in how a clear vision and a smart strategy can bring order to complete chaos. They totally transformed an entire industry, really, by making trust a standardized product. They've already built this multi-billion-dollar giant, but their ultimate goal is so much bigger. The real question now is, what new challenges are waiting for them as they try to become the undisputed Amazon of home services?